Welcome. Today, we're diving into one of the most compelling turnaround stories on the Nasdaq, SEGG Media, trading under the ticker SEGG, formerly known as Lottery.com. Before we begin, please note that the following discussion is for informational purposes only and does not constitute investment advice. We will provide a full disclosure at the end of this episode. Let's get straight to it. There is a massive disconnect happening right now with SEGG Media that demands attention. On one hand, you have the market pricing the stock at around $5.60. On the other, a brand new research report from Noble Capital Markets has just initiated coverage with an outperform rating and a staggering $20 price target. This isn't about future potential. It's about a fundamental disagreement on what the company's worth today. So the question is, what is the market missing? To understand the opportunity, you have to see that the market is still looking in the rearview mirror at a company that no longer exists. Many will remember the name Lottery.com. In 2022, it went through a spectacular corporate implosion. An internal investigation was launched on July 6th. By July 29th, as detailed in their public filings, operations had effectively ceased. It was a complete freefall. But that collapse set the stage for what we see today. A new leadership team took over, completely overhauled the strategy, and in July 2025, rebranded as SEGG Media. This isn't just a new name, it's a new company with a new playbook that is already being executed. SEGG's new playbook is a three-pillar strategy designed for resilience and growth, and critically, they are already delivering tangible results in each area. First, the gaming pillar. The plan was to relaunch Lottery.com. The proof of execution is already here. Operations in Mexico went live in August, and just last week, SEGG announced its re-entry into the massive U.S. market by filing for affiliate partnerships with state lotteries in Pennsylvania, Michigan, and Virginia. Pending approval, this will be another active revenue-focused strategy. Second, the sports pillar. The vision was to build a global super app around the iconic sports.com domain. The proof of execution is in the acquisitions. They've already acquired GXR, a sports platform with over 1 million users, to form the technical backbone and a digital network with over 750 million monthly views. They aren't just planning to get into streaming. They've already signed exclusive global rights for Super League Kerala and the Dodds Diving League. And third, the entertainment pillar. The goal was to enter the live event space. The proof of execution is the completed acquisition of a majority stake in Concerts.com and Ticketstub.com. This move was immediately validated when competitor StubHub announced its IPO targeting a multi-billion-dollar valuation, showcasing the immense value of the market SEGG is now positioned in. But they aren't just buying assets, they're bringing in top-tier talent to run them. As another powerful proof of execution, the company just announced the appointment of Simon Lewis, the former president of Live Nation Europe, to a full-time senior consultancy role to oversee the strategic rollout of Concerts.com and Ticketstub.com. This is a massive move. Lewis is a titan of the live entertainment industry, and his appointment sends a clear signal that SEGG is serious about execution. His expertise is intended to accelerate the company's positioning in the high-growth ticketing and live streaming space, and in the words of CEO Matthew McGowan, to build a customer base of people who are looking for a change from the status quo. This brings us to the heart of the bull case as laid out in the new Noble Capital report, embedded asset value. The argument is that the market is valuing SEGG on past performance while ignoring the immense value of the assets it owns right now. And here is the tangible proof of that secured value. The report calls them the 4 crown jewels and assigns a staggering $85 million valuation to just those 4 domain names: sports.com, lottery.com, concerts.com, and ticketstub.com. These are category-defining assets. Owning sports.com is like owning the digital address for the entire sports industry. That value exists today independent of future earnings. On top of that, the report adds another tangible asset, the new Boca Sports Complex in Florida, a 100,000 square foot arena, valuing it at $16 million. You add those together, the $85 million in digital real estate and the $16 million in physical property, and you get a total asset value of $101 million. Even after applying a conservative 20% discount for execution risk, the target enterprise value comes to $81 million, which translates to their $20 price target. Of course, this is a high-stakes investment, and it's crucial to address the risks head-on. The company's own 10Q filing from August is very clear, noting a significant working capital deficit and a going concern warning. This is the challenge the new management team inherited. To address this, the company announced in late August that it has secured $450 million in financing commitments from key investment partners. And this is precisely where the opportunity lies. The market is currently in a show-me phase. For investors, the thesis is built on the belief that management will execute, creating a potential re-rating of the stock. So, what is a company truly worth? Its past performance or its hidden potential? For SEGG, the market appears to be waiting for final proof, but the proof of execution is already arriving. The US lottery relaunch is filed for approval. The Sports.com super app is being built on an acquired user base, and their motorsports marketing strategy is already a proven success, with their sponsored driver, Lewis Foster, just clinching the IndyCar Rookie of the Year title, a massive branding win for Sports.com. The opportunity here, as Noble Capital points out, exists precisely because the market has not yet priced in these tangible assets and recent successes. This is a story about a potential re-rating, where the stock price could catch up to the underlying asset value as the execution continues. The question for investors is not if this company has potential, but whether they believe in the new team's proven ability to finally unlock it. As a final reminder, the information in this podcast was prepared by the investor relations firm JP Capital. This content should not be considered investment advice. In the interest of full disclosure, JP Capital has been compensated by SEGG Media for investor awareness services. Furthermore, JP Capital and its employees may hold or trade securities in the company. Investing in the stock market, particularly in small-cap companies, is inherently risky. We strongly encourage you to conduct your own independent research and consult with a licensed financial professional before making any investment decisions. For a full disclaimer, please visit jpcapital.finance.